Today we're going to talk about the 3 things you need to think about before you become an S corporation. My name is Tony Cameron with TLDR Accounting, and we provide tax and accounting services to therapists and other small business owners. S corporations. Everyone's always like, no, should I be an S corporation? Will it save me money? Is it something that I should be doing right now? I'm just starting my business. Should I do this right now? I have 3 things I talk about with all my clients before we even discuss becoming an S corporation. 1, is your cash flow steady enough to handle becoming an S corporation? Now, what do I mean by that? So an S corporation, a key component of it is reasonable compensation. That means you need to pay yourself a reasonable salary. What do I mean by reasonable salary? The best way to think about it is, what would you pay to an employee to do what you are doing today? So what is the replacement cost of you? Is your cash flow steady enough for that? So I've had examples come in where folks are like, all right, I just started my business. Things are ramping up. I have 2 different clients. I want to become an S corporation. Well, they're not making any money. At that point, it doesn't make sense to become an S corporation. So step 1 is always, is cash flow steady enough in your business to handle payroll? Because that is reasonable compensation and payroll, hand in hand. The second thing I always bring up in the second factor is, are you keeping your bookkeeping up to date? So a good test is, are you staying current on your bookkeeping? Are you 6 months behind? Are you updating it each month? Because that goes hand in hand with, is your cash flow steady? Because your bookkeeping needs to be up to date to make sure that you're making enough money to make this work out, right? To make sure you can pay your reasonable salary for the year. So 1 is your cash flow steady? 2 is your bookkeeping up to date? The second part of the bookkeeping up to date is, if you're keeping your bookkeeping up to date, more than likely you can handle running payroll each month. So it goes hand in hand with, again, that reasonable compensation. The third point is, does it make sense for your business? So along with keeping your cash flow steady and your bookkeeping up to date, do you have enough business to make sense? If you're only a seasonal business and you're only working, say, April through August, does it make sense with your cash flow? Does it make sense to add on the additional complexity? Because becoming an S corporation is more complex. When you're a single member LLC, as most people tend to form their business, to become an S corporation, you make an election with the IRS, and that then has you become treated as an S corporation, and you have a separate tax return to file now. It's an S corporation tax return. Well, before, a single member LLC is just reported on your 1040 on Schedule C. So the first complexity is you have a separate tax return. The second complexity is you have, again, that reasonable compensation, which is one of the things I brought up. So along with that reasonable compensation, you're going to have to payroll. You got to pay yourself. You got to get yourself set up on payroll. Are you prepared for that, right? Along with that, since now you're on payroll, retirement's going to change. So depending on what type of retirement you're saving for, that now is going to be based on different numbers, because now your compensation has changed because now you're on payroll, right? So there's a lot to think about. It isn't always, oh yeah, you should totally become an S corporation right now. Now we have some general guidelines that we offer up. Step 1, are you making $80,000 to $100,000 gross and your expenses aren't that large? Now what I mean is, does it mean your net income is around $50,000 to $80,000 per year? Because you got to have enough net income to cover your reasonable salary, in addition to costs to file a separate tax return and to monthly payroll costs. So say your net income's only $20,000. If you were really going to hire someone to replace you, you would have to pay $35,000. You don't have enough cash flow coming through the business to cover your reasonable compensation. Now, if your reasonable compensation is $65,000 and your net income during as a single member LLC is $100,000, That gives you enough wiggle room to cover your reasonable compensation, payroll, any additional retirement costs, any additional fees for a tax return, and for payroll software. The second part is, are you keeping up to date on your bookkeeping? If you can keep up to date on your bookkeeping, you can handle payroll, which is important. And then third, does it make sense for your business and what you're doing? If you're only going to be running your business for 2 years, does it make sense to make the election, file all the paperwork, get payroll set up when you're closing down in 2 years? Or maybe you're going to pull back in a couple of years because you want to start a family, or you want to grow, teaching classes at a university, and your income within your private practice or small business would shrink. In those circumstances, it might not make sense. Hopefully you found this helpful. If so, you can read more below and subscribe.